Hey everyone, today we are jumping right into some brand new IRS guidance that could mean more money for you starting in 2025. Seriously, if you work for tips or you're logging overtime hours, you are definitely going to want to pay attention. Let's dive in.
So let me just ask you straight up. Does your paycheck depend on tips? Do you find yourself working extra hours? If you're nodding your head yes right now, then this explainer was made for you.
Well, get this. There are new tax rules on the way that could literally let you keep more of your hard-earned cash. We're going to break down exactly how it all works so you can take full advantage.
All right, so let's really dig into the details of this new tax law and what it could mean for your wallet. Okay, so this all comes from something called IRS Notice 2025-69. And here's something that's super important to know right off the bat. This is not a permanent change. It's a temporary rule that only applies to the tax years from 2025 through 2028. And its whole goal is to help workers who get tips or overtime figure out these new deductions. All right, first up, let's talk about tips. If you're a server, a bartender, a stylist, anyone who relies on gratuities, listen up, because this could be a real game changer for you.
And boom, here is the big number you need to see. The maximum you can deduct for qualified tips each year is a whopping $25,000. Yeah, you heard that right. That's a huge potential tax saving.
And don't think this is just some obscure rule for a few people. No way. The IRS itself estimates that about 6 million workers in the U.S. report tipped wages. So if that's you, you are part of a very large group.
You know, the best way to really wrap your head around this is to see it in action. So let's walk through a quick example. Meet Ann. She's a restaurant server. So for Ann, it's actually super simple. You look at her W-2, find Box 7, Social Security tips, and it says $18,000. She doesn't have any other unreported tips to deal with. So that's it. She can use that full 18 grand for her deduction. Nice and clean.
But, you know, life isn't always that simple, right? What if your situation is a little more complex? Let's bring in Bob, a bartender who has a few different things going on.
Okay, so Bob's records are a little more interesting. His W-2 shows $15,000 in tips, but he knows he actually reported $20,000 to his employer throughout the year. And on top of all that, he has an extra $4,000 in tips that were previously unreported.
And this is where you get to be a little strategic. Bob gets to pick the higher of those two main numbers, so of course he's going to take the $20,000 he reported. But wait, it gets better. He can also add that $4 grand from Form 4137 right on top. You do the math, that brings his total potential deduction to a very nice $24,000.
Okay, so what about all the folks in the gig economy, the freelancers, the self-employed workers? You are not being left out of this. Let's take a look at Doug, who's a freelance travel guide.
Now, Doug's story is a perfect example of why you have to keep good records. Seriously, he gets all his payments through an app, and his 1099 form just shows one big lump sum. It doesn't separate his service fees from his tips, but because Doug is smart, he kept a detailed daily log of every tip he received. Because of that log, he can prove, hey, $7,000 of this was tips, and just like that, that money becomes eligible for the deduction. See, record keeping is absolutely key.
All right, let's switch gears. We've talked tips, but that's only half the story. There's also a brand new deduction for everyone putting in those extra hours. We're talking about overtime.
For the overtime deduction, the magic number to keep in your head is $12,500. That's the maximum you can deduct each year for your qualified overtime pay.
Now, to really get this, we have to understand a term called overtime premium. This is super important. It is not your total overtime pay. It's only the extra part you get paid above your normal rate. The easiest way to think about it is this. When you get paid time and a half, the time is your regular pay. The half is the premium. And that half is the part we can deduct.
Now here's the thing. Every employer can report overtime a little differently on a pay stub, so the calculation can vary. Let's run through a few common scenarios so you'll know exactly what to do when you see it.
As you can see, the math is actually way easier than it sounds. If your pay stub shows your total time and a half pay, like Andrew's, you just divide that total by 3. Boom, $5,000 is deductible. If you get double time, like Brad, you divide by 4. And for government employees who get paid for compensatory time, like Diane, you also just divide by 3. It's really that simple.
Okay, we're almost there. But there is one last, really crucial check we have to talk about. Not everyone will qualify for these deductions because they are based on your income.
And here are the income thresholds you need to know. If you're a single filer, the deduction starts to phase out if your modified adjusted gross income, or AGI, is over $150,000. For joint filers, that number is double, at $300,000. So you've got to know your AGI to see if you're eligible.
Whew, okay, that was a lot of information, I know. So let's boil it all down into a few key action steps you can take to get ready for the 2025 tax year.
Think of this as your 4-step game plan. Step 1. Gather all your paperwork. Your W-2s, 1099s, pay stubs, and especially those personal tip logs. Step 2. Identify your total income from tips and overtime. Step 3. Do the simple calculations we just went over to find your potential deduction. And finally, Step 4. Check your AGI to make sure you're under that income limit. That's it.
So, as you start thinking about your finances for next year, I'll leave you with this question. Based on everything we've just covered, what's the very first document you're going to pull out of your files to see if you can claim these new deductions? Thanks for joining us.